We can just start with the laugh. This is actually perfect. What's up, everybody? I am here with my good friend and I want to say all around good guy in the crypto space. Like, I don't feel like we have a lot of those. Nicholas Merten, aka Data Dash, aka crypto analyst and investor. What's going on, Nick? It's good to have you here.
It's good to be here, Alex. Thank you for having me, man. And I'm excited to get just chat with you. We don't get to do this too often, so I'm eager to hear what you've been up to and what you've been building and talk a little bit about what we think about the market and everything.
We are doing better though because we had this moment where we would exchange like 3 or 4 messages in like a 5-month span, something like that. So I think we're still doing better. Like, we are communicating. But
we're catching up. See, it's easier to do during the bear market, man. This is the time where all the juicy stuff's happening. So we get to really catch up properly and talk about like the foundations of what's being built now that'll be materialized 2 or 3 years out. Or we sound crazy now, but like
2-3 years. Who has 2-3 years? Like, actually, before we started recording this, like, we were talking about like time horizons and how VCs have some of them have incredibly short time horizons. A lot of them have ridiculously long time horizons. Like, we're not here to, judge or anything, but we do have our own perspective on all this. Like, I definitely think that having incredibly long time horizons in crypto is very odd. Like multi-decade is very odd because a lot of the people that I talk to that I like their approach and I like their mental framework for investing. Like, if we're being totally objective, it's very hard to say, like, will Bitcoin still have its status in a multi-decade time horizon, right? Like, obviously, like, we like Bitcoin. Like, this is actually how we met. We were fanboying over Bitcoin, like, many years ago. But if we were to be totally objective, like, it's very hard to say, like, is Bitcoin going to be the Bitcoin that it is right now in 20, 30 years, for better or for worse, right?
Yeah, I think one really good analogy of this, like stepping out of like the decade of history that crypto's had, when you think about even the safest bet here, I think people would argue is probably Bitcoin or Ethereum, the most established players at the moment. It's amazing when you just look back at, for example, the dot-com bubble, which I think is very comparable to crypto in the sense that there was a whole sporadic amount of ideas that came out in the 90s, companies that raised way too much money at ridiculous valuations with no real kind of revenue projections. And while crypto doesn't really need revenue, the comparison is quite similar in the fact that if you look at the amount of companies that rose up during the dot-com bubble were really taking over the headlines, just a year or two later into the bear market, this is where you filter out the noise. And there was over about 95 to 98% of all the IPOs that had launched during, I think, the 5 years up into the peak of the dot-com bubble had vanished. Now, they delisted, they went bankrupt. And I think that, when you think about that comment you mentioned, Alex, about like the 10-year or multi-decade time horizon, I think that it's great in a lot of ways. I think on an ethical basis, I'd love to see more VCs thinking long-term. But the problem is that if you're really investing in these protocols that are early stage ventures or don't have revenue models or don't even entirely sometimes know what they're building or who they're building for, if you're going to be putting those kind of size checks into these startups, you got to be ready to accept that you still might lose it all. Like, the 10 tickets you invested in might end up being complete flops. But I think the best thing you can do is have that kind of broad exposure to the space and still have your big bets, if you really know how to filter companies and follow a strategy that works for you, to be honest.
I don't know if this has been coined, but if it hasn't, let's coin this term, the Goldilocks VC. Mm-hmm. So, like, please don't dump once we list, but also maybe, you don't, like, just for your LPs and for people that invested in your fund, like, maybe multi-decade is maybe also not the route to go, right? Because, like, I feel like that's a big problem that we have in crypto right now is, well, especially the former, which is a lot of really bad players who have brand recognition, who, if you ask a lot of founders who maybe raised once or they're new to the fundraising process, they're like, oh, I want to get an investment from X. Like, I would love to be backed by Y, right? And they just don't know, they don't have the insider knowledge to know that those are some of the players that are actually notorious for dumping, right?
Yeah. It's a big problem. I think the biggest issue is that eventually for a lot of these players, they take advantage of that brand as time progresses. And maybe they did work their way up. Maybe they have built some recognition. But unfortunately, it's very difficult to find those who have been through not only more than one cycle, but actually, as you can see, like have invested in projects that have actually materialized and been successful. I always would look at portfolio companies, not just to find ones that would be matches to like our startup that we ran, Digifox. But on top of that, I would always look at companies as well that just simply had successful names on their board, and how early did they get on, how good were they at filtering those companies. And I'd immediately want to know, if I was interested in working with them, like what did they do for them, like what really beyond a check, like did they really, were they the VC or entity that helped them to get that first leg up to be the leading DeFi protocol for AMMs or for lending? So for me, that's very, very important to do that due diligence and try to dive a bit deeper outside of than just chasing brand names, because everyone wants to get an A16Z, everyone wants to get all the big names on board. But it's not only incredibly difficult, but they, as VCs themselves, they want you to come to the table and be able to have all the right questions. And if you don't have any, they're not going to be interested. They're going to be thinking, whoa, these people aren't really like, first off, they're not coming with the leverage and weight of options. They can tell that by the fact that they're not asking questions. And on top of that, they want you to have thought about working with them. I think it's like any kind of relationship. If you're going to pursue something for, multiple years or work together and put money into it, you really want to think about who's the project and who's the VC.
I definitely agree. And we also need to kind of disambiguate, because obviously everyone wants, as you mentioned, everyone wants A16Z on their cap table. And that's probably the most, especially in crypto, it's the most outlier VC fund in terms of, what you're getting with A16Z apart from brand recognition, at least in my opinion. I'm a big Ben Horowitz fanboy. I read The Hard Thing About Hard Things and What You Do Is Who You Are, about building culture in organizational structures. I read those two books minimum 2 to 3 times a year, sometimes once per quarter. I just feel like they keep me in check. And probably the only call I had with a VC that they were like right on time. Like they were just so punctual. And I love that, because that's part of their culture, is don't waste the founder's time, right? And I just think it should be applauded. And I just think that's really cool, which is not the case for so many other ones. But I really want to ask you, because when you were raising, you took the non-VC route, actually. And you did this deliberately, despite it being an equity raise. So I kind of want to talk about your experience and what shaped your framework into kind of pursuing this route.
Yeah, absolutely. Just to provide a bit of context for those who may not know, I have so I've done my YouTube channel Data Dash for the past couple years, since 2017. So I've been doing crypto market analysis and analysis over the broader financial markets. And back in 2017, we grew to being the largest channel. We're not anymore, but we still have a really substantial audience across the globe. And on top of that, I was at the time in 2019, when the market was really dead. It was deep bear market. And at the time, I was really excited about DeFi as an emerging kind of sector within crypto. It was the only use case to me that got me really excited. So what I wanted to do is I went out and I self-funded the creation of a DeFi smart wallet, similar to players like Argent or Dharma, that basically allowed you to not have to remember a private key or seed phrase, to be able to have self-custodial funds, to be able to tap into yield, swap from one token to another through DeFi protocols like Uniswap, all from within one mobile interface. And while I funded the kind of pre-seed funding and did put additional funding into it on my own later on, what we wanted to do was either one of two routes, either the typical VC route or go through equity crowdfunding. And we're going to likely do it through a program called WeFunder, which we ended up doing in the end. I thought that this was going to be the best decision, because if we went down the VC route, we could definitely probably raise at equally as good of a valuation, or maybe get some internal resources. But for me, building a, this kind of software platform, aggregating a lot of services, my number one goal is to get that first 5 to 10,000 users. And what was really cool about the equity crowdfunding is that between that and the YouTube channel, I was not only able to raise at a really fair, I think, valuation, we were able to get a good amount of people on board. We got nearly 1,000 unique investors participating in it, investing as small as $100 all the way up to the biggest ticket size of $50K. So we had people from all over the world who could participate. And what I think what's really great about that model, and this kind of goes in line a little bit with AngelBlock as well, and kind of democratizing those investment opportunities, is that you have, in my case, I had 1,000 warriors who were ready to go out and tell everyone about Digifox. And that helped us get from those just initial, say, 1,000 investors, some of which may or may not have been users, up towards over 20,000 users, and I think a little over the first year. And for a startup to get to that kind of scale so quickly, it's a happy problem. It's something that is difficult to manage, but it at least is a positive sign that, okay, you've got some kind of product market fit. People are using it. We were generating a couple $100,000 in revenue in the first year, which was for me really exciting because it showed that people were willing to pay into our monetization model early and really use the app rather than just counting, the amount of users. So anyways, I think, looking back on that experience of doing an equity crowdfunding, there is a lot of good, and there was also some bad. I think the best part about it, again, as I emphasized, was the amount of users you're going to get immediately. A VC cannot build community. I really have a strong opinion about that. I think unless you really are going to bring a name that brings a lot of weight and therefore a lot of eyes that are interested in what you're doing, it's very difficult for VCs or entities to build that community for you. So I think that's where equity crowdfunding, or more broader like crowdfunding that allows people to participate, is where you can get a lot of people vested, whether it's in your token or project. And I'd say probably the biggest negative of equity crowdfunding is that when you do democratize that investment opportunity, you also have a lot of people who aren't incredibly knowledgeable in investing. So this is something I say, looking back, when we eventually had to shut down our startup, one of the most difficult things that I had at the time was seeing people on our equity crowdfunding page saying okay, how do I get my $500 back that I put in? And this was really difficult because it says it in the terms, it's very clear that this is an equity raise or a safe raise essentially. And it could either go to zero or it could become the next, Google or major tech company. So I think that's the difficult thing, is that sometimes people will come from crypto where you can invest in a token and it 10x's within a month or two. And it's difficult to explain to people when sometimes it's going to go to zero if it doesn't work out. So yeah, I think that's probably the biggest thing, is that it needs to come, I think, with a pair of education on the side as well.
Yeah, this is the main kind of differentiating factor that I speak of when talking about the difference between an equity type investment and a token type investment.
Right.
Regardless of all the regulatory, hurdles that one can possess or the, other one has as well, depending on the jurisdiction, the main differentiating factor is, when does the liquidity event occur, right? So for many, many years, when we have done equity type investments, you invest whatever the amount of money is, hoping for a liquidity event to occur in the next, 10, 15 years, right?
Yeah.
Which meaning IPO predominantly, right? And with tokens, you start with the liquidity event. You start with launching a token that later gets transformed into a market, whether it's on a decentralized exchange or a centralized exchange. And I think a lot of people that have gone the token route that are now going into the equity route, they don't really understand that difference, which is incredibly painful, because even if a token doesn't do a 10x, which many don't, right? But you still, let's say you have a 50% haircut from your original investment, which is, still compared to an equity type investment, if something doesn't go the way it's supposed to, is like 50% is still like, hey, I'll take 50% of 50K, right? Like, hey,
yeah, and it's a loss you get to write off at the end of the tax season in countries like the US, and it's like, hey, I still got 50% of my money, and I can go put that in something else. I think that is one of the big benefits of a token, because while someone might, for example, want to, maybe for example, a token is valued lower than the entry point, and someone's like, hey, I'm not really feeling confident in the project, there's the liquidity in the order book for people to come and say, hey, I find value in that. I'll buy it from you, and someone has a bid on the order book. And I think that is one of the more beautiful things about the token dynamic, is that, a lot of people can lose faith in companies along the way, or projects. I think of Tesla as a great example. Literally, it was 2 weeks away from bankruptcy, I think in 2019, and everyone was bashing the company. And at that moment, when there was peak fear in the company, it just did a hockey stick move, switched to profitability, had the first quarter of profitability in its history, and became the largest electric automobile manufacturer. So it's value is very, very like much perceived in the moment. And I think that there's, again, that ability for people to benefit from being able to see a couple months out, being able to assess the risk profile. And that's where kind of the beauty of tokens can come in sometimes.
It's very well said. One thing that you mentioned earlier is VCs can't build community. And I'm going to throw this back at you with a slight curveball. I don't know if you're ready for this.
I'm ready.
Can influencers build community?
That's a very good question. I think the right ones can. I don't mean to be too negative, and I don't want to sit on like a pedestal as if I'm like the perfect influencer. I'm just any other individual.
Okay, to be fair, like you're like, I don't want to fanboy out too much, but in my book, you are as close to the perfect influencer that there is. Like, I remember watching your stuff back in 2017. I still watch Data Dash quite regularly. You know my schedule, so but like it's as regular as I can be. And you know, with the audience that you have, you don't have any BitBoy moments. You don't have any, oh my God, buy this token, and then the token goes to zero essentially. You know, like it's as like, there's obviously always going to be some level of flack just because like you're well known in this community and your audience is quite substantial, as I mentioned. So there's always going to be like some friction, but that's normal when you achieve that level of public awareness, essentially, right?
Yeah. You know, well, I appreciate the kind of remarks, Alex. I think you hit the nail on the head, to be honest, like about really deciphering who is a content creator and who's an influencer. Like I really kind of, to be honest, when people I've like spoken at conferences, or people usually address them, they'll say like Data Dash is a cryptocurrency influencer. Yeah. And I'm like, dude, like, I don't know about that. I don't know if I want to take that label. I really honestly, like, while I'm not meticulous on language, I think content creator fits much better, because one thing that people always really liked about my channel since 2017 was that I started, you know, in the middle of the 2017 bull market, didn't expect anyone to really watch the channel, was just doing it for actually my career path at the time, which was going to be in data analytics, which hence the name Data Dash. And I was just talking about crypto markets, just kind of shooting the shit, sharing my ideas. And what I found interesting is that like people started watching, and I kept just creating content, just seeing what happens. I did 2 videos each day. And the best thing that I really loved and noticed early on, seeing as it was my most successful YouTube channel after creating like 10 or 12 over the last decade, one thing I noticed is that, you know, whereas there'd be like 1 or 2 comments that would say, hey, Nick, you should get a green screen. You got to improve your quality, your videos. And in the background, I had like my bed, and you could just tell I was just chilling in my room. And I asked my audience, like, hey, do you guys think I should get a green screen? And everyone was like, no, we love that you got your bed in the background, and we love knowing when you haven't made your bed. Like, and it was like all these like really funny jokes. And I was like, it made me realize that, wait a minute, like people don't want to be sold something. They don't want you to act like this know-it-all guy. They want to know that you're being authentic. They want to know that you're being genuine and just sharing your general ideas. It doesn't mean there's any guarantee of anything, but they just know that you're real. And especially, it's kind of like, I think, like a lot of podcasts out there, when you're watching someone, it's almost kind of like you're there with your friends or something, and you're tuning into the conversation because they're people you trust, they're people you're interested in, they're talking about things you're interested in. And I think that is a really big distinctive factor between a content creator and an influencer. An influencer flaunts their wealth and shouts at the screen and has clickbait titles and thumbnails, and is just trying to exactly, like, you know, the completely shocked faces on YouTube. I just don't do things like that, because I think that tells me, if anything, as a viewer, it tells me, oh, you're trying to extract value out of me rather than give me value. Like, I think like a content creator, I think of it like, whereas like scams extract value, or people who are doing really shady business, most businesses in the world create more value than they take. And like, sure, they make profit at the end of the day, but they're providing value to people more than they would have without the company. I think that's a general thesis of what I try to follow. So yes, in that sense, going back to the question, I've seen how, like with our channel, we really try to align with a lot of projects that are exciting. We were early to like finding Chainlink back in 2018. We were really early to, I guess, honestly, a pretty wide range of different protocols nowadays. And I can definitely see how a lot of those community members, they kind of, build on to some of those protocols, which is really exciting for me, like to see some of the ones that have succeeded. Some have failed, of course, to be honest, but I think for the most part, as you mentioned, we've got a much better track record that is focused on longer term relationships rather than, hey, here's a project and then it goes to zero or dumps immediately.
Yeah, because like those are very good points. And when we started with the question of can an influencer build a community, right? And your kind of short form answer was the right ones, right? And it's like, who are the right ones, especially in this day and age? It seems like in this last cycle, it seemed like even a lot of the influencers or people that had the good guy reputation on Twitter, that something came up, right?
Yeah.
Like there was some kind of token sale or some kind of token dump, some kind of undisclosed ad.
Exactly.
And it's just it's kind of painful, like it's you're really starting to analyze even further, like can these people on Twitter be trusted, right?
Yeah.
And one of the things that I've had a conversation with a friend of mine who's also doing some advising for us at AngelBlock. He said, like, right now, the state of the influencer market is you cannot. I'll go off of what you said because, like, I do agree with your answer, but his form of the same answering the same question was right now the state of influencers is everyone is looking for a gold rush, and it's probably the easiest way to kill your market is working with a lot of these influencers because you're gonna you're gonna gain 3, 4, 5,000 holders, and then you're going to see a dump in the price because they're like, oh, it didn't 10x yet. So a project actually that I've been talking to you a lot about recently, Aleph Zero, or probably in the last year we've been talking about it. So I look at the price from time to time on CoinMarketCap, right? And CoinMarketCap has those the comment section on the side. And I remember, like, that is a gold mine. It is incredible. I remember, like, I don't know if this person is trolling or not, but, like, that comment was just absolutely hilarious. It was, I bought this a week ago, and the price hasn't increased. It's a scam. I'm like, oh, wow. Okay.
Really, it's like the TikTok level of, like, retention or, like, attention span has now been brought into a marketplace, and people are like, hey, where's my money? Like, like, it's been a week. Rent's due. Come on. Like, where's my returns?
Oh my God. It's that BitConnect mindset, that Safe Moon BitConnect mindset. If it's not increasing every day, you're doing something wrong, bud. You got to call the devs. This shouldn't be taking this long.
Devs, do something.
Oh my God. It's just horrible. It's horrible. And like now, that's actually a really good question that was originally brought up. I think in July, like someone can fact check me on this, but again, we're talking about the good guys. We talked about you. I definitely think that the guys from Up Only, so Ledger Status and Kobe, like they're. I think they're objectively, you can call them good guys. I think they mentioned this back in July in one of the episodes, and it was basically using influencers or working with influencers has been a pretty pretty solid go-to strategy for a lot of these projects. And like right now, it just doesn't seem to be there anymore, right? So I think a pretty good question right now is how do you actually market crypto startups, right? Like, so first of all, we've had the Google ban, in place forever.
Yeah.
Since the 2017 ICO run, we had the ban on Google. Twitter is, I don't even know right now. Like maybe with Binance being part of that Elon Musk purchase package, something's going to change. But I remember, like, I wanted to. You know how I approach things. Like, we've known each other for a few years. I definitely am not the kind of person that's going to be like, oh my God, buy something from me. It's going to 10x or something. But like we wanted to run some ads, probably like 2 months prior to our NFT mint, and we didn't actually want to run ads like, oh my God, we're going to have an NFT mint, but just kind of like, hey, like, there's this protocol and like we're working on it and we think it's really cool, just kind of like increasing engagement and brand awareness. And like we've been shut down like first 30 seconds. Like there was nothing problematic, nothing, sketch. And to this day, I still get a bunch of promoted tweets that are literal scams. because they're like mint a Bored Ape or mint a VFriend, mint something.
Exactly.
And like those mints took place, a year and a half ago. Like those are scam links that are still going through the moderation process, right?
Right.
So like, I know I don't want to throw you too much into the deep end of the pool, but like, where do we stand with marketing in crypto? Like we want to attract the right people, right? But the right people are usually incredibly hard to get, and our outlets are incredibly controlled, or they're essentially censored, right? And there's this increased sense of skepticism, rightfully so, but maybe we're going overboard since it's a bear market. How do we attract users these days?
Yeah, I think there's kind of two like wings of users to focus on. There's crypto natives who will much more likely understand what you're doing, or at least will be able to digest it in a much deeper level. And then there's the outside users. When it comes to the crypto users, that's where you have to apply more of like a custom tailored approach, because you're probably going to get more technical. And I think that is, to be honest, while again I'm in my bubble as a content creator, not an influencer, but as a content creator, like I'm definitely a little bit like biased here, but I think that that's where you can extract a lot of value.
I'm writing that down.
Yeah, because I think that the important thing here about this is that when you're thinking about content, it's not just content creators too, like really any outlet you can think about where if you are very aligned with your project, where do you think people are going to come from, right? Who are going to join into your project? They're going to come from the same outlets that you're attracted to. I think they're going to come from the same content creators that you respect. They're going to come from the same outlets or subreddits that you would usually go to as a user yourself. And I think that is it. While it sounds dramatically simple, it works incredibly well. Like for example, like with Digifox, we would only kind of partner with content creators I would only go on and do interviews with certain types of YouTube channels or platforms that I knew are more grounded users. The content creator themselves is much more level-headed. And I think, again, if you know how to have those visual signs, you can filter out those content creators very quickly. But yeah, I mean, I think, again, like I wouldn't care so much about advertising, like in the sense of like traditional social media, because as you mentioned, you see the kind of stuff that's on there. It tends to be that if there's only junk advertisements, that's the only kind of stuff that's really going to monetize on there. Or you have this really big, during the bull markets, you have this really big ad campaigns run by eToro or all the major companies, Coinbase, that have so much money to toss, they don't need to really think about what they're getting per click. So I think when you're a small startup, you need to be smart with your money, and it needs to be about finding a content creator. Like I can use the example of a content creator. If the content creator you're talking to doesn't make content that you like, don't work with them. If they aren't willing to do something, not say for free, but like as a discount or something to test the waters and see if it actually, if he or she is not speaking about building value for you, it's like any other kind of business, like don't work with them. So those are the kind of things that I think are really good filters. It's like doing anything in business, just being able to see that they're in it with you, or they're in it for the long run as well.
Yeah, one thing that I noticed, this was a suggestion from a very good friend of mine, who's been through the gauntlet, right? Like they did the multi-million-dollar raise, they're doing very well right now. And when we were talking about essentially content creators, but essentially podcasts, right? And he said something really interesting, which was pitch them, like really pitch them like they're a VC. Because if they're excited about what you're building, they'll just either have you on or want to help out, right? Like you don't have to settle for like $50,000 or $100,000, or I don't know what the fees are right now.
Crazy amounts, yeah.
Yeah. So that's one thing. Another thing I wanted to ask you about, and that I've noticed, because it's another one of these really insincere tactics that I'm, I know you're in your bubble. You mentioned it yourself, so maybe I'm just noticing it since I'm more in the trenches right now. Is I have seen dozens and dozens of Twitter profiles from projects that I've either barely heard of, I know they just started, or I've never heard of at all, who have tens of thousands of followers on Twitter. And it's incredibly easy to verify that the majority of those followers are bots, right?
Yes.
Like you go on a site, you sign up, I want 10,000 followers, and then you don't have any engagement because, obviously you're breaking the algorithm. And my question to you is, If anybody here is a baseball fan, I'm not really a baseball fan, but I think this was incredibly interesting how they started chasing people using steroids. What was it, like 30 years ago? And you essentially had to be on steroids because everybody was on steroids.
Right.
So if I'm not on steroids, I'm currently, I'm the hurt party because I'm being left out. So the question here is, if you're looking at new projects, right, and someone has, I don't know, 9,000, 5,000, like actually engaged users versus 20, 30, 50, 60, 100,000 that are just bought, right? Like, is this hurting? Like, if this is becoming the new norm, is this hurting like the quote unquote, I don't want to say good players, but people that aren't taking this route?
Yeah,
just from an optics perspective, I guess.
Yeah, from an optics side, that's again like I think it's having a basic knowledge of like how much of social media and how much traction is artificial. One of the things that I always would say, if there's a project who's, for example, looking to work with a content creator, the first thing I would ask them is, what's your average view duration on a video? And on top of that as well, like how many of your viewers like come back, to your videos. So I can say, for example, on my channel, like I would say, I think it's roughly around 60% of people are going to watch 2 videos in a week out of the 3 that I put out. Like it's a really big like retention rate. Most of them are previous subscribers. I think that's the actual metric. And on top of that, you can also see the view time there. One of those things that, this Instagram or more specifically more Twitter profiles do is they will buy a lot of followers and they do the same with likes and retweets on their posts. So it all looks like, oh man, there's real traction, there's real users.
Pin post. The pin post is usually the telling sign. And then you scroll down and it's like ghost town. Yeah.
Exactly. Yeah. That's the key. It's like you have to be able to just do a little bit of due diligence and be able to hop on a call. And if they aren't willing to provide metrics, I'm not ashamed. Like we always, like with any sponsor, I'll usually sometimes proactively just send out the metrics that I think are reasonable. I always encourage them as well to do like smaller packages if we ever do a sponsorship deal. And I think, again, the biggest thing overall is being able to be smart with your money, because the biggest problem I've seen with projects is that sometimes, and sometimes they're incentivized to do this, as marketing departments, they just toss money when the going gets good. And they think, hey, if I don't do this, we're going to fall behind. It is much more in crypto about being able to survive bull and bear markets and being able to keep your budget balanced and make sure that you're getting good money for it. So if you're not using, CTM or UTM links, if you're not utilizing, kind of like trial packages with advertisers to see if it's really worth it, then it's going to be a lot of money wasted on a one-time event, Again, it's a little bit nuanced. It's different for every situation, but we've been very big about every time we talk with someone like, hey, let's try it. Because to be honest, as a genuine content creator, like thinking in my own selfish interest, I not only want to make, revenue in this case, it's a business at the end of the day. We got to be able to feed ourselves. But on top of that, like you also want to make sure that your viewers like the sponsor. If they're not converting, I don't want to bother them with the sponsor. That kills my view rate. It kills my retention. So I think that is a huge giveaway. If someone doesn't do any due diligence and they'll just take your offer right away, then that's a big problem.
So it's like product market fit for content creators. So content creator startup fit. Let's call it that. Let's coin that.
Let's create a new algorithm. Yeah, exactly, a new acronym.
But it is incredibly important. Like it's I've seen partnerships or sponsorships where someone comes on like either as a guest or there's like an ad integration, and 2 episodes later the host is just going to town not on that sponsor but on the market segment that they're in, right? Maybe not even remembering that he's, working with a sponsor. And it's just like, okay, like you can be honest, but maybe if that's how you feel and if that's how that the majority of your audience feels, then maybe don't take him on as a sponsor if you're going to just rip their market segment, 2 episodes later or on Twitter or something like that, because it's, you're not doing anyone any favors taking that money, right?
Yeah. Absolutely. I think overall and stuff, again, it's about finding a balance and making sure that it's going to be stuff that people want to see on your channel. Like you said, I think the biggest thing is, again, and this is, again, what's nice about this, I think the best part of it, in the end, karma always comes into play to some degree. I think the only reason we've been around for the past 5 years is because I've always felt really good about what kind of content I cover, what sponsors we work with. I mean, you and I have talked about, Alex, I think around like referral links for Bybit and leverage trading exchanges. I see that as a casino. That's what it is. Like at the end of the day, like, and the rate of users that will lose all their money on those exchanges. And you can make a ton of money off that. Like content creators make tons of money from the liquidation fee when people lose money on the exchange. They make more money when they lose rather than, like you would think like, in Binance, they have a scheme where, for example, this was actually like, I think this is a great model where essentially like they'd have a revenue share program. So it was 50-50, right? Binance would keep 50% of the fees. You would get 50% of the fees for any users you brought on. That's what made them the #1 exchange back in 2017. But there's other exchanges that are derivatives exchanges like Bybit or FTX, and they all allow you to trade on derivatives or leverage products. So you can go 10x long, and if it goes up 1%, you make 10%. But if it also goes down 1%, you lose 10%. And if it goes down enough and you're on a high enough degree of leverage, you get liquidated. You lose all your money on a bet. And that essentially, when that happens, you get a liquidation fee charged at a slight premium of when you really should get liquidated. And that fee, some of which goes to the exchange, but a lot of it goes to the content creator if you use their referral link. And man, it's insane. I think I don't need to point names, but you can look at the content creators out there, as you mentioned, the Moon Boys, the 100Xers, or there's an Eminent Move, the guys with this and their thumbnails. Yeah, that will easily filter who those guys are, and you'll just see if they're promoting it. But they made ridiculous amounts of money. But you have to ask yourself, like, did you make that money in a way you're proud of? Money can be made in many ways, but it's the same with investing as well. Yeah,
are you sleeping at night, right?
Are you sleeping at night with what you're doing? Exactly, man. Alex, I don't know if you're sleeping much nowadays, dude, because you're traveling all the time and working so hard.
now I have an issue that I'm like, since I landed from San Francisco last night, like, I feel like all I've been doing is sleeping. So like I slept 5 hours in the plane, and then I landed at 8 p.m. on Sunday, and then I just went to sleep. I couldn't sleep in the beginning, but then I slept till 9 today. So I'm like, I've slept 3/4 of the day, just since I landed. So it's been kind of wild.
Just hibernating.
So maybe I'm just catching up. Yeah.
Hibernating a little bit.
So you mentioned something a few minutes back about startups being smart with money, especially, since we are in a bear market, confirmed. I don't know if this is news to anyone, but we're in a confirmed bear market. I've been watching a lot of your videos when you've been talking about macro, but especially talking about BTC and ETH and how they're performing, but also kind of your outlooks. I kind of wanted to get your thoughts on especially how macro is influencing crypto and to what extent. Like, because it's a lot of times we can tell from what happened in May and June, I feel like we underestimated the macro environment. And it very quickly turned to a lot of people on Twitter. I don't know if you notice the same thing. Maybe it's just the people that I follow. But then it turned into people just saying like, oh, like all of you macro people, like crypto plays by different rules. I'm like, I feel like we underestimated it, then we overestimated it, and then we underestimated it again. So I kind of want to get what you're feeling about the macroeconomic trend that we're in right now, how that affects crypto, whether at all.
Yeah, and I understand why some people are skeptical, because crypto Twitter has become this like, when things become boring in crypto, everyone's really pivoted to the macro, and now everyone's an expert on what Jay Powell is gonna. Yeah, CPI. Have you heard about the CPI? We're watching the CPI here today. But it's incredible. For me, one of the things that I benefited from is I didn't start in crypto, so I started investing in equities back in 2011. Not at some big bank. It was self-taught. I opened up my first brokerage account. And over the last decade, I've learned how impactful it can be to learn about the macro sentiment, because if you understand what's going on in the big picture, and it takes a lot more data points and a little bit more time than just observing what's going on in crypto and what's the next big altcoin, you start to really get a comprised picture, even though people have different opinions, of where money's flowing. And really you have to think about that. If you're going to make an investment and try to make a return, put everything aside, the elections, China versus the US, currencies, equity markets, and crypto, and central bank monetary policy. You just got to really think about, hey, out of all these things together, like, are we seeing more inflows or more outflows? Are people going defensive and hedging, or are people risk on? And are they betting from one asset to another, taking gains, investing in somewhere else? And that's the dynamic that really, if you can start to learn from the macro perspective, that's where you start to get some really juicy insights. If you know that central banks continuously are in a trend where every time the market dips and people are fearful, they come to the rescue and they print money. Who would want to bet against assets? Who wants to fight against the Fed? At that moment, I'm willing to take the most risk. If you look at players, for example, like Cathie Wood and the ARK Investment Fund, they were the poster child of success during COVID. And it was because they had all of their exposure in all of these big tech names. It wasn't just because of like COVID. They didn't know that COVID was going to happen. At least I don't think they did, right? No one really knew that it was going to happen. But they made absurd amounts of money, and they were on every single media outlet talking about their vision and how great it was. But come the bear market, when the Fed isn't printing anymore, ARK is like the poster child of failures in this market. And I don't mean to be rude. I admire Cathie Wood and like the ARK team.
Same.
I think that they're really nice people, right? But I think that, again, it's important to understand. And what I don't like seeing is that right now, names like them are still betting that the Fed is right around the corner about to pivot. Then they're continuing to make heavy bets on a lot of companies, which, to be honest, in the next few years in a very high interest rate environment are not going to succeed. They're not going to do well until those dynamics change, right? And the key thing that I really want to drive in here is that if you, again, don't understand how that monetary policy and the money flow is working, you're just going to be tossing money into something that's bleeding. So my point here, like I would kind of drive home, I guess, with my macro sentiment and how it plays in with crypto. I think that so long as inflation is far and distant away from that 2% target that the Fed has been beating like a drum that it is going towards, whether it be on the CPI, which is a bit more difficult, or on the PCE, which would be a little bit more addressable. And until we see higher rates of unemployment and we start seeing oil back in low double digits, the Fed will not stop. And I really think, again, one thing we drove a lot on the channel over the past few weeks was with the recent FOMC meeting that the Fed just had. I was saying the Fed gave us 3 items that they're looking for. A softer labor market, a slowdown in economic growth, like multiple quarters of GDP decline, and inflation back at 2%. We have had none of those yet. And while the Fed may say, oh, we're going to only raise by 50 basis points, people really think, oh, they're going to raise by 50 basis points, then they're going to drop. People really kind of view it in this immediate switch off. But I think the Fed is going to keep raising rates steadily over time, and they're going to keep it capped for a while. And I think the one example I would use that's maybe a visual one, I don't have the chart up here, but if you look at like the NASDAQ, or any of the major stock market indices, and you really look at like previous real bear markets that last over a year, I mean, they're brutal. I mean, they can go down 50, 70%. And I mean, the major thing that some people don't really consider is the difference between, say, the typical 20, 30% correction we've had over the last decade during the secular bull market, right, versus one of these recessions. The difference between a 25% dip to a 50% dip is massive. The difference between a 50% dip to a 75% dip is massive. And that's the problem, I think, with just buy the dip, just stack sats and stuff. I mean, there's nothing wrong with that, right? Like if you're moderate about it, if you have that long-term time horizon and you're in the safer plays, I think it makes sense. But
that's a very good point, because I did that back in 2019, right? And I just kept buying the dip. But no, this is back in 2018. Okay, back in 2018. Yeah. And then Q3, Q4 of 2019, I'm like, with what? Everything is allocated. I have nothing to buy the dip with.
Exactly.
This is getting insane. So like definitely, people need to be pretty aware of this. And just to come back to Powell and something that Ben Hunt recently said, which is like, I'm just quoting Ben Hunt here, but it's a lot of economists will agree with this sentiment, is if you want to curb inflation that is that high, usually you would need to have interest rates that are closer to that target of inflation, right?
Exactly.
Of the inflation rate, right? So like that's why we had that 16% interest rate. I think it was in the 70s
during the Paul
in the
Volcker
US
era, and in the 70s.
Exactly. It's like, yeah, that's brutal, but like right now, like I feel like if it's like the entire market's reacting, if it's 50 or is it 75 basis points, like it's not enough. Like regardless of what it is, it's not enough.
I don't mean to joke about it because interest rate hikes are difficult, right? And I think but the major thing I always liked, it just as kind of like a joke, like really like people made this meme about Dark Powell, like, Dark J Powell coming out, like he's really just keeps sticking at the 75 basis points. I completely agree with you said, Alex, like the sooner we can get to that short-term window of pain, it will stunt the demand. It will literally shock demand. And that will bring back that equilibrium demand and supply, which is what we need to do to get price stability.
And it's going to be painful, but right now it's just slow bleeding out, in my opinion.
Exactly. What he really needs to do, I mean, like, again, everyone's got an opinion on what Jerome Powell should do, but I really think, exactly as you said, he needs to hit the markets with a surprise. Sorry, guys, we're not pivoting, and we're not raising by 75 basis points. We're doing 100 basis points, or we're doing 150, like something really... a shock and awe kind of blow off top to the Fed's tightening and say that let us make it very clear here in this meeting, as we have in others, we are going to keep it here and we are going to address inflation. And he's doing this. I would say he's on the better end rather than on like the pivoting end. If he pivots, if the Fed goes back like some people are hoping for, man, I hope that people who are investing in crypto or equities with that kind of mindset are hoping to make just like a short-term trade, just like make, relief rally and take advantage of it and walk out. Because if the Fed does that, it is going to be brutally painful. That's what can easily take us from having a 50% bear market downturn where things are addressed properly to a 75% downturn. And the amount of companies that will get flushed during that period of time in our portfolios, from altcoins to early stage tech startups that have IPO'd, that's going to be disastrous. And that's going to be much more pain in the long term.
So I definitely see some divide in how people are approaching this. And to be honest, I'm kind of flip-flopping between sides just based on new information or new frameworks that I'm developing. But, equity markets and more traditional markets have been leveraged up for the better part of the last decade, right? Crypto is much more compact. It's more compressed, essentially, because we had a massive deleveraging event, a few months back, right? And it usually happens in these, whether it's 18 or 22-month cycles, what have you. So right now, like, it does feel like crypto has become much more deleveraged, especially looking at and comparing it to what's going on in the macro sense. Like, do you think that helps us out at all? Or is it still just, if macro hurts us, then it's just max pain across the board?
No, I think there's a very fair point to be said on that, Alex. Like, even though, like, for me, I remain in my thesis right now. I even did a video today, like, that was actually more optimistic, and I can talk about that. But I'm generally right now, I'm still sticking to my bearish thesis that so long as the trend is either stagnant to the side or in the long term declining, until I see really solid higher lows, higher highs, until I start seeing the bull market indicators flipping on again, like support on the 200-day moving average, a lot of these, different things like the RSI on like the monthly or weekly timeframes really starting to show bullish signs. And really getting that big juicy green candle that signals like, whoa, any shorts got knocked out, big whales coming in. They're not waiting for their bids anymore. They're market buying. That's the kind of stuff that gets me excited. And I'll pay a premium happily, like on that, like a slight premium from like the current prices now, if that happens even tomorrow. But I have to say, you bring up one really good point. Even though I do remain relatively bearish still, there is one really interesting dynamic that we talked a lot about on the channel for the past week, and it's utilizing a method I call ratios. And it's basically where you take the performance of one asset class against another. And one of the charts that I did is Bitcoin or BTC USD divided by IXIC, which is the NASDAQ composite. What I find really fascinating about this is that while like still some of the big tech names that were the market leaders during this previous secular bull run are now starting to really fade and lose out more than anyone during the bear market, while crypto definitely had a brutal sell-off with Celsius and all this stuff happening, this deleveraging, as you mentioned, what we're finding now over the past couple months, really since Powell got strict in August with the Jackson Hole speech on August 15th, since then, Bitcoin has been setting higher levels against the Nasdaq. Price-wise, it's still like relatively neutral, but we should expect Bitcoin, which is usually seen as this much more risk-on asset, to be depleting more against the Nasdaq during risk-off bear market periods. And that to me is really exciting because it might mean that while I can't say it for all of crypto, Bitcoin and Ethereum and kind of those larger, more established assets where it might really become like these vortexes of liquidity like gold did back during the 1970s. So you were mentioning earlier during the previous wave of inflation, you know, all of us here today probably didn't invest through that period. Maybe there's one person, right? But this is something entirely new for us. But if we turn back to history, during the 70s, there was a multi-stage wave of inflation up towards upper double-digit territory. And it was because the Fed kept pivoting, kept pushing the barrel down the road, kicking the can down the road. And they had really never experienced a wave of inflation like this and how to address it. But the key thing is that during that period of time, as the Fed was pivoting, people really started to lose trust in the currency, in government bonds, and the entire structure and system as a whole. And that's where gold really started to shine. And gold had a major multiple bull market where it just completely went parabolic. I really recommend it for anyone listening, just go check the chart. It's like, it's beautiful. Like, it's like really like, I think it's the chart that everyone wants Bitcoin to do. And we just might get that. I think there's like a 10 or 20% chance that Bitcoin could do that, especially if the Fed pivots here in the next 2 or 3 months where it stops raising interest rates. If it stops, exactly as you said, Alex, inflation's just going to kick up higher. You're going to get $200 barrel oil. You're going to get really ridiculous prices, you know, because there's already so much being put into play to soften that demand and that lower that price. But it's still like prices are still remaining quite elevated at these levels. If you look at commodity markets and stuff. So yeah, anyways, I could go on about it for hours, but
we should have one episode where we do go on for hours. Like, I'm definitely going to let you run in a second. I know it's getting late where you are, but I want to ask you one more question, and that's okay. I don't want to lead you too much with my own personal approach to this, so I'm going to start with a more generalist question. Is this bear market different than the previous 2018-19 bear market we had in crypto?
Absolutely. And there's a really good chart that I'd recommend people look at, which is just the all-time history index chart for Bitcoin. You can find it on TradingView just typing in BTC USD and zoom out, like go to the monthly or 3 quarterly time frame and stuff, and you can see the whole 10-year history of Bitcoin. And then what I would recommend setting up is a moving average with a 200-week value. Historically speaking, during equity bull markets, like stock market bull markets, the 200-week is a buy the dip opportunity. Even a couple of points or dollars above that range, that's when usually you buy the dip, when the Fed is printing money. That level on the Nasdaq has been broken and now is acting as resistance. That's the first time in the decades since 2008, right? And in this case of Bitcoin, usually prices calm down to that 200 week and they don't live there very long. They bounce right back up because that's been the buy the dip opportunity for crypto after those 80% plus bear markets. Nowadays, price has been remaining below the 200 week moving average for, I think, 2 or 3 months now, for the better part of 2 or 3 months. And that is incredibly scary because that means that not only are we likely in for some more downside, but the previous buy the dip range where all the institutions or larger whales would come in with substantial capital, while price is moving sideways, they're not bidding at that moving average. They haven't been able to bid it back up there. So historic support is not acting as support once again, and it's starting to act potentially as resistance. Price hasn't been able to get above there and make it support. The really big thing, I mean, to consider as well is that we've only been down about, I think, 75% from top to bottom.
That sounds about right.
And that was back during the June lows, I think, around like 17,700. Most bear markets are 80% plus, 80 to 90%.
Yeah. So we're in the range currently to appeal to your TradFi side. Our current downtrend from all-time highs is in the Cloudflare Spotify region. So negative 72 to negative 75%. And we're just hoping that it doesn't go to the Asana or DocuSign, which is 84, 85%, Or would be a doomsday scenario, the Peloton, which is almost negative 92%.
That's a really. I'm so happy you brought that up, Alex, because like for me, I'm watching equities all the time. That's where I differ from most like YouTubers in crypto, and it's incredible to really think back a year and a half ago. Peloton was the poster child company. I mean, it was really like we're all going to work from home. We're going to be on our bikes, and it's not to say that it didn't sell like wildfire. It did. But their margins were terrible. And now, just 2 years later, when the easy money goes away, this is again what I wanted to drive earlier. If interest rates remain in this range for a long period of time, even if they stopped here, and let's say it cooled inflation, but it was going to take a year or more, the amount of companies that are going to go bust during this period of time, it's going to start stacking up. The smart ones started, cutting back expenses, laying off a few excess employees. Like it's never fun, right? No one wants to look forward to it. I'm not saying I think that this is great and stuff, but it's a necessary evil when you have excess, right? And I think it's like a diet. You have to trim down. You have to really make sure you're going to survive through. You stay in good health so you can survive any challenges that you face. It's all about survival. I think again, there's going to be a lot of difficult times ahead and stuff if we don't address this swiftly. I think that, Bitcoin, for example, like a good target to look for is the big even level of 10,000. If I was to toss out a number, I'm not saying it's got to go there, but I'm definitely interested at 10K because at that moment, you've got a substantial decline, huge even level that's going to be very, very difficult to break. There's going to be a lot of buyers who want to buy Bitcoin at $10,000 a pop. And I think that we could definitely get there, especially if the broader equity markets decline 50% or more.
So 10K could be our March 2020 kind of level.
Exactly.
If you remember that.
I was in New York.
3K panic.
Yeah, I was in New York, and I remember like being at this like small crypto event. There was like huge names. There was like I think the CEO or one of the major guys from Galaxy Digital. There was, like really big heavyweights as well from like Fidelity and all these names speaking at this little round table. I'll never forget it. There was like all these chairs here and probably 11 people, including myself, attending, and these 4 big industry names speaking. I think maybe even Alex Strzesniewski might have been there or something at the time, like really like big names. And I remember I was in New York City during like the buildup of that panic around COVID at the time. And as they were speaking, this guy in the audience got up with his phone. He's like, "Hey man, I'm sorry to interrupt, but like Bitcoin is down 24% right now." And this has already been after it dropped like 15-20% the day before. That was panic on a level I have never felt before. And I was curious, man. I was like, dude, to be honest, I was wondering, I was like, is crypto done? Is this it? Like,
yeah, I think we all had that.
Yeah,
like that was a very scary time, to be honest.
Yeah,
and there's this so like right now, obviously everyone's talking about like the Binance FTX drama.
Yeah,
we're not going to go into, but there is a lot of people in this space saying that if it wasn't for Alameda back in the day, like things could have gotten a lot worse.
Yeah.
So I don't know, just something to keep in mind.
Yeah, it was at that period of time. I remember like just hearing like so many rumors about like I remember I had one contact. I won't name it what company and stuff, but they are like one of like the big institutional players when it comes to liquidity within the crypto space. And they basically said something along the lines of like, dude, you don't even want to know like what's going on behind the scenes right now to like keep this thing afloat and like make sure things are accounted for. It was insane. But like, I'm very happy in the end that crypto survived. And I think it will always have a place. That's one thing I also have a difficulty translating to people is that in the end, I believe crypto is going to still be the best performing asset class of our lives, if not one of the best. And it's one of those few rare opportunities we get to be still at the cutting edge here. I think this is still going to be a multi-trillion-dollar asset. So we've got a lot of growth potential, especially now in this bear market with the valuations we're sitting at.
And portfolios are built in a bear market.
Yeah, man. Alex, you and I have talked about that. Like, I think that's something like for anyone to know, like a little bit of leaked alpha at the end of the day. Bear markets are where you make the investments. Bear markets are when you go to the conferences. Bear markets are when you build, baby, because all of that gets realized in the bull market. Most of the projects, the good investments, the 100Xs or whatever people really want at the end of the day is never found during the bull markets. It all starts during the period when no one's talking about it. So, like I said, Alex, I love what you guys are doing stuff with AngelBlock. think it's, again, like for me, like someone who did an equity crowdfunding, I can relate so much to it. And I know one thing we didn't get to talk about, but I just wanted to say I love how you guys are focused on fixing so many components of the process of raising capital and making sure that there's real altruistic projects that are actually going to succeed through those apps, filtering out a lot of the noise that's just gone on for too long in crypto. So I'm happy to be a part of it, man, and see through the journey with you.
I really appreciate that, Nick. Like, thank you so much for saying that. And thank you for coming on. Like, I had a great time talking to you about this. Like, I definitely feel better prepared to, hit the rest of this week and not do anything too crazy on the markets right now. I really hope to have you on again, man. Like, this has been a blast.
Thank you, man. It's been a blast here as well, Alex. And yeah, like to anyone again, like who's focusing during this bear market, focus and prioritize, like, what you're interested in, have a long-term vision. And again, like this is the period of time to do it. I know it's difficult, and Alex, you can speak to that, man. Like, I mean, it's difficult being a founder, like when no one's watching, like, but I think you got something really impactful here. And you guys, I mean, the community for AngelBlock is just really awesome. I mean, I've never seen a Telegram that's so excited. Yeah.
And it's, it's like, we know we're still pretty small, like, but that's the thing. Like, I know everyone that's there has been interested in what we're building at one point or another, right? Like, I don't feel the need to buy or, like, I don't even know how you do this, like the 40K inactive users on Telegram that are just going to, like someone's going to go on and be like, oh, 40,000 members. So it's like, oh, but 23 online, it's like, what's the point of that? Like, we know that if you're in our corner, we know that you're real. And maybe you heard about us a year ago, maybe you heard about us yesterday, but like, we know that you're interested in what we're building and you want to be part of this. And I think it's a lot easier to gauge interest in what you're building and potential traction rather than just, have bots that, bots or these click farms, in random places that are just, inflating these numbers, right?
I know it might have sounded weird earlier, but when I was using that analogy about like having 1,000 warriors for Digifox when we did the equity crowdfunding, there's real weight to that because I would much rather have 1,000 people who could become real users, who could deposit real funds, who could go out there and actually promote to their real friends, versus a perceived value of 40,000. That doesn't buy me much traction, like in the end, like just because you have a lot of like followers doesn't mean that it's going to give you, immediately more traffic. It maybe works for Instagram celebrities or things like that. It doesn't work for companies, in my opinion. But that's a strong opinion I have, and stuff maybe different.
Just to put this in context, what we're talking about, because like I know that there's a lot of people that know us personally, and they know that we're not bullshitting anyone. But just to put things in context, Super Oracles, they recently had the public, quote unquote public portion of their token sale. And I think it closed, the first phase of it closed in literally a few hours, but they raised 2.7 million from 400 users, right? Wow. Like, you don't need thousands and thousands of people to, first of all, to have traction, but also to fundraise, like, especially in crypto, like people, they want to invest a lot of, I also think that, the average investor or user of a DeFi protocol or even of an exchange, I think that level of education and understanding the markets is increasing year on year, right? Like, I remember like people, like I know that people, Bored Ape holders get a lot of flack for losing their seed phrases and things of that nature or giving them away to scammers. But I do think that despite the fact that more people are entering this space, I do feel like more people are becoming really knowledgeable, right? Yeah. And they are becoming very well equipped to invest in these kinds of things and contribute to these kinds of raises.
You got to go through one bear market to know what to do the next time around. Or you have to, I guess so, in a sense. You have to go through one bull bear cycle and stuff. And then really within moments, again, I had everything I knew about crypto walking into it that I was prepared for, that I think added value for the channel, was getting burnt in equity markets. I mean, in the end, I've made a net return out of it, which has been great. But you have to go through those painful experiences, and hopefully with a smaller amount of capital. That's why it's really best not to rush into things. But don't be afraid to make mistakes along the way and stuff. That's the only way we learn. And the earlier you can do it, the better, so you can capture future opportunities.
That's a positive note. I like.
I like.
We're
Yeah,
gonna
we
leave it there.
got to wrap it up.
Yeah,
Good.
that was too good. That was too good. Nick, thank you so much. I appreciate you, man.
Thank you, Alex. Appreciate it, brother. Nice talking to you.
Take care.